South African earnings only really kick off this week. We've got a spate of financial companies coming out with numbers, and the markets seem convinced that this is the bottom end of the cycle just by taking a look at the share prices. Are you convinced?
I wouldn't know if I was convinced, but certainly the market has this unbelievable ability to look through the bad cycle and see the good news at the end. You know, South African markets and certainly some stocks, we've got Old Mutual reporting this week, for example. You know, that stock has pretty much doubled and some more since its lows in March. So I don't know if we're through the cycle yet, but I think investors are certainly looking at possibly this is the worst it's going to get. You know, you had Impala, you know, the Anglo Platinum results out last week, also much worse than expected, yet the stock is pretty much the same level it was. I think investors are looking at it and saying, well, it's not going to earn less than R1.40 or R1.50 a share going forward. So, yeah, the stock has run hard, and I guess the proof's in the pudding where we are now. Are these stock levels justified? And as these earnings are coming through in the next week or two, we'll certainly see if they are.
Because we've already had a slight indication of what we can expect from some of Old Mutual's operations. We had Mutual and Federal results last week. Nedbank's put out a trading update saying its headline earnings will be 32 to 37% lower. What are you expecting from Old Mutual as a group?
Well, pretty much in line with the statement, but if you look at what it's sort of the siblings have done, like Nedbank, for example, and Mutual and Federal, the earnings were not great at all. Impairment costs rising. I think Mutual and Federal has some currency charges there in place as well. The hedging didn't work out, so not expecting a great update in line with the rest of the financial markets. But the stock is sitting, you know, 12 rand 20. So it's come off a low of right down at 4.50. So if you're a shareholder, you'll be very happy. But looking forward to seeing some more guidance, because it's certainly justifying quite a heavy rating.
Nick, what about the likes of Standard Bank that has been quite badly impacted by the likes of Liberty due to its hedging?
Well, Standard Bank, you've got to look at what its loan book, what its return on equity has been. You know, looking at the ABSA's results, which we'll speak about later. You know, impairment charges rising, doubling from what was a year ago, and I expect Standard Bank to be pretty much the same. Standard Bank slightly different space to the other lenders in South Africa, with the big parent ownership, with a big balance sheet behind it. Certainly puts it in a little bit of different space.
How about dividends? Are we seeing, well, we know that Anglo American decided not to pay an interim dividend following on from cancelling its dividend last year. ABSA's maintained its dividend. What are you expecting dividend-wise from companies? Are you expecting them to cut back and stop paying dividends?
I think, Stephen, it all depends on its balance sheet. You know, Anglo American, when it stopped paying its final dividend, I mean, that really spooked the markets. You don't really want to be in that position. People want to see dividend flow. What we're seeing in the past is people like Anglo American, you know, not paying a dividend to save itself $1 billion. You know, it's pretty much small change for likes of Anglo American, but it just shows the severity that some of these resource companies are certainly up against. The financial companies, slightly different space. I think our industrials are slightly different too. But the resource counters have certainly, with the underlying spot prices down by 50-60% from its highs, they're going to really battle to maintain its sort of dividend flow.
Nick, just looking at the JSE ALSI, we're well above 24,000, and when you say that's a key technical level, and now we should be firmly in a bull run, do you think that we've set ourselves up for disappointment?
I don't think we just set ourselves up for disappointment, but I certainly don't. I mean, where's the upside from here for in the short term? We've had such a strong run from its lows. There's been some very good news coming through offshore. There's been some great news on unemployment, certainly looking like it's bottoming out in America. The house prices month on month jumping for its first time in a couple of years. So the positive economic news is filtering through offshore. Whether or not we've seen that in South Africa remains to be seen. We are certainly not in the same space as America bottoming out in the cycle. We still have GDP contracting. We're still on unemployment rates in South Africa rising. So I think we're in a slightly different space to the cycle right now.
Many market watchers have been expecting a bit of a pullback in the markets. What do you think the catalyst for a pullback would be?
Sure. I mean, everyone I know is either short the market or waiting for this pullback. It's going to take something pretty large to make it pull back, because the market is discounting a lot of the news. The problem is at the moment is that we're halfway through the year, more than halfway through the year. There's $3 trillion odd sitting in money market accounts on the side. You know, a lot of overseas commentators have referred to this as the most despised rally that we've ever had. because all these money managers have not put money in the market. They're sitting with getting 0.5% on their cash offshore, and they need to put their money into the equity markets right now. So unfortunately, it's been driven by a lot of money flow, and a lot of money coming in. And to any sort of pullbacks, I think the money managers and professional managers were putting money in.
Well, we've got the dollar at its weakest point this year. We've also got the Dow, which is quite interesting, that the last half hour of trade every day, it either swings one way or the other. And it seems that there are a lot of day traders playing the markets right now. In terms of the fundamental factors that are driving the markets, do you think that people are underlying quite afraid of what's going to happen going forward?
Yeah, I think that the cautions still remain. You know, there's no doubt about it. I mean, just look at what's happening onshore in South Africa, for example. You know, we're still possibly going through the worst recession that South Africa's had in 17 years in contraction point of view. It takes quite a lot to ask to look through where we are right now. As I said earlier, you know, unemployment rates are rising in South Africa. You know, the rand, where it is, it's sitting at 770, 760. It's going to have a huge impact on our local earners. You know, the miners and the gold miners in the Pacific, I mean, this is really going to impact the earnings. And I don't think the market's factored the strength of this rand in the equation.